So today we're going to be talking about one dividend stock that I personally love having in my portfolio and kind of breaking it down a little bit as a company that maybe you can look into when it comes to having in your dividend investing portfolio. Now, of course, dividend investing is always a long-term game, so you always have to look at the possibilities of maybe not having the biggest growth on the stock itself, but then also making sure that you pay attention to, how much the stock is going to be paying you for the money that you're putting into it. Now, what we're going to do is we're going to hop over to seekingalpha.com. That's the website I love to use when it comes to breaking down different stocks and the possibilities of them having been added to my portfolio, as well as maybe continuing to invest even more into them. So just because I have a stock in my portfolio doesn't mean I want to keep putting more money into it, because maybe the stock has grown pretty extensively to the point where the dividend yield is not really getting me the results that I want for the money that I'm putting towards it. And then other times there might be where the stock has plummeted pretty low during, certain economic times and maybe hasn't recovered yet. So that dividend yield is a pretty sweet deal with the money I'm putting in. So with that being said, let's go ahead and talk about this dividend stock that I love having in my portfolio. And I've kind of been putting some extra money towards just this particular stock. Now, when we head over here on the computer, we're going to see that this company is Aflac. Now, I've talked about Aflac before here on the channel. And it's one that I was mentioning that I'm actually buying more into for, I think, the last month or two, to be honest with you. Now, we're going to talk about some pieces here when it comes to Aflac. But one thing to keep in mind, too, is that, I'm not your advisor, so make sure you're doing extended research beyond what we talk about here today. Now, just to kind of go over some data points here, the 52-week range on Aflac was as low as 2307 and as high as 5718. So that was the range right over there. And you can see over here, this is where that bottom out was. And then, of course, towards the top, I believe it was almost about a year ago. And it's been fairly steady here throughout most of 2019, at the very beginning of 2020. And then, of course, everything happened. And then you could just see that plummet go all the way down. Now, if you notice something here when it comes to Aflac, is that they have not yet recovered back to where a lot of these other stocks have. Now, of course, there are different reasons for that, and there's a lot of situations that can cause companies not to recover as quickly as others. But you can see that that could be potentially an opportunity to keep investing. But it could also be an opportunity to maybe lose money if maybe the company is not heading in the right direction. So that's why we have to do this extra research into what's going on. So what we're going to do is look first and foremost, of course, at their PE ratio. So their PE ratio is 8.57. I typically like to look at around 20 or less, because for me, I'm trying to look for value in stocks more so than I'm looking for growth opportunities, at least with my dividend investing portfolio through M1 Finance, which is what I love to use to build my dividend investing. Which, by the way, if you are looking for a platform to invest for dividends, I'll have my link to M1 down below. I have tons of tutorial videos you can check out to kind of help you through that process if you're trying to figure out, a system that works well for you to earn those income dividends, or the dividend incomes. So, okay, let's go back and look at this. So this gives us, of course, a little bit more insight, but what I want to do is actually go ahead and click over to our dividend tab right over here. As you can see, it says dividends. So this is where I get a lot of information on the dividend end. So what we're going to be doing here is looking at their dividend yield. So as of this recording, this of course can change on a daily basis. Their dividend yield is 3.04%. Their annual payout, so if you have one full share of this company, you will make a annual dividend income of $1.12. Now, this company does pay out on a quarterly basis, which means every couple of months, you're going to be getting 28 cents per share that you have. Now, whether you have full shares of Aflac or maybe you do fractional shares like with on M1 Finance, you will still get those fractional pieces. Or if you have full shares, of course, you're going to be getting those exact dollar amounts. Now, if you look over here, this is probably one of my favorite things when it comes to investing more into Aflac, especially as a dividend investor, is this payout ratio. Now, this payout ratio right over here is, I'm making it look really shiny. I don't know if that works, but this payout ratio is 26.10%. Now, in case you don't know what payout ratio is, it really just means that after everything is said and done, that's how much the company is paying out in dividends from the profits that they have. So the higher the percentage, the more money they're paying out in dividends, and that can be very scary if they're getting close to 100%. There's been times where companies have gone over 100%, which means they've actually taken out debt to pay those dividends. So the lower they are from 100, the better off they are, because that means that they have a lot of room to grow in the future for increasing their dividends, which is a really important part that not a lot of people talk about when it comes to dividend investing. And that is how often they raise their dividend yield, so that way you can actually get your money's worth year over year and not essentially lose value over time. So a good ratio, by the way, because I know some people might ask, so a good ratio to look into, let me clean this up a little bit. This ratio right here, usually around 60% is what you're going to hear from a lot of different investors, whether it's here on YouTube or elsewhere. And that's a good threshold to have. So if a company is paying you 60% or less of their overall profits to the actual dividend, that's good. That gives them a lot of room to grow and focus in on areas of their business, maybe increase that dividend like we just talked about. But one thing you want to keep in mind too is some companies will have a different goal and mindset of what they want to achieve. So that percentage can be higher for other companies and it's still okay. So if a company, has some good metrics and maybe they're at 75% of the payout ratio, that's not necessarily a bad thing. So just kind of keep that in mind. And then obviously with a company like Aflac having only 26% ratio, that means there is so much breathing room for them to, one, keep their dividend, and two, continue to increase it, because dividend cuts are a real thing, and also dividend suspensions are a real thing too, which means that the company might even stop paying dividends if it gets too high of a percentage, and that has happened especially during downturns in the market. You see this happen a lot during recessions. It happened in 2008. It happened a lot in early 2020. Now, one other big thing here that we want to really notice as well, actually it's two things. One is the dividend growth right over here. So dividend growth, in order to have this being built up, every year you have to be increasing your dividends. Now, some companies do this once a year. Some companies maybe do this every couple of months, whatever the case may be. As long as they're increasing the percentage, and it could be super tiny, by the way, they get that dividend growth rate right there. So that way, Aflac is at 38 years. Now, there is kind of a phrase, if you might have heard of it, called being a dividend aristocrat. Now, a dividend aristocrat is a company that has been increasing their dividends for over 25 years, which is pretty massive. That's a long time for a company to be increasing their dividends, not just paying it, but increasing their dividend. And then there's also another one where, as you can see here, Aflac is kind of in the middle here, where if you get over to 50 years paying out dividend increases, you are considered a dividend king. Pretty massive goal to get to. I think it's pretty impressive that companies can do that, especially considering that I think some of the highest dividend increases has been around like 67 years, I think is some of the highest. You guys can let me know in the comments if somebody knows what the highest one is. I'd like to see if somebody can figure out which company has been paying the most dividends the longest as far as increases. Now, the other thing we're going to look into here is the 5-year growth rate, and we're going to just look at growth rate in general. So Aflac has a growth rate of 7.57%. Now, I mentioned earlier that growth rate is really important, at least to me, when it comes to focusing on dividends, because I want to make sure that my money's worth more every single time I get paid out, rather than having to barely keep up with inflation. Because most people know inflation it could be anywhere from like 1 to 3%. Sometimes, I think it averages around 2. Obviously, 2 is the average between 1 and 3 there. But pretty much what it means is that every year, if you are increasing the dividend yield, that means your payout, even if you don't buy any more stocks from that company, is going to be worth more. And it's a beautiful thing. And I'm going to show you here just kind of how Aflac has done it, just to kind of give you some ideas. But yeah, anything pretty much over the inflation rate will make your money worth more. Obviously, the higher the percentage, the better it can be, as long as the company can sustain that, because that's a big deal too. If the company is trying to increase their dividend year over year, but it's not sustainable, they might have to either cut it or suspend it. And that's never a good thing for dividend investors, because maybe they want to pull their money out afterwards if they have to do one of those two things. Before we go into the diving deeper into the 5-year growth rate, just one thing, as of the recording of this, as you can see here, Aflac is trading at $37.11. One thing I've been telling a lot of people too is if you are into fractional shares, something that I love to do, which is with M1 Finance, I don't necessarily care about the stock price. I know that sounds weird because obviously the cost of the stock is going to dictate how much you can buy of it. But what I care more about is that dividend yield. And if that dividend yield is going to be where I want it to go, where I want it to be, which is typically around 2.5 to about 3.5%. That is my ultimate goal, as long as the growth rate on the dividend is a good number, which obviously Aflac here is. So the reason that dollar percentage, or actually the dollar amount, doesn't matter is because my money is still going to be worth that 3% just because I'm putting it in Aflac. If I was buying a stock that was worth $100, but their dividend yield was still 3%, my money would be still returning me the same amount, just depends on the actual number of shares that I have from each company. So the actual dollar amount on the share price doesn't really matter. So in case you're always worried about that stuff, fractional shares really takes all that stuff away. All you should pay attention to probably would be the dividend yield, and then the 5-year growth and the payout ratio when it comes to those metrics. There's also the PE ratio, like we talked about. We'll also look into debt here a little bit too, because sometimes that can play a big factor for some people. You don't want a company that's over leveraged on their money, so that way they essentially either have to get more loans out or have to maybe even do those dividend cuts like we kind of talked about. So here back on the screen, what we're going to do is go over to the dividend news here. So I'm going to click on here, and you're going to see right over here. So this is where they're going to announce kind of their dividends right here. It says they declared 28 cents a share for their quarterly dividends. It showed their current yield at the time because of the price that they were at, and that was back in April. So what we're going to do is jump down here in February, as you can see here. I'm going to kind of highlight this. So it says Aflac declares a 28 cents per share quarterly dividend, and it says that's an increase of 3.7% from the prior dividend of 27 cents. Now, 3.7 is quite a bit lower than their 5-year average, and that can happen. Obviously, this was potentially with everything else going on in the world in early 2020. But effectively, if you had shares in Aflac at the time and you didn't buy anything extra, you got a 3.7% increase for doing absolutely nothing. So let's say you had one share of Aflac. Normally you're getting 27 cents, a quarter, but all of a sudden you are now getting 28 cents a quarter, which effectively is 4 extra cents you are making a year for having done nothing extra. Now, 4 cents a year is obviously nothing, but if you scale that up with the number of shares you might have and also that percentage, maybe if it was closer to like 8%, obviously would have been an even bigger increase. But that's just something you want to keep in mind, and how powerful investing into dividends can be if you have companies that are increasing their dividends at a good rate year over year, especially at this kind of at this kind of payout ratio, as well as average growth ratio too. So if we look at the last one after this here, let me go ahead and scroll down here. Where was their other dividend increase? So this one right over here, it looks like January 31st, 2019, they did go from 26 cents to 27 cents, which was still a little bit below their 5-year average at almost 4%. So that is definitely better than inflation. And again, you are raising the amount of money that you're making every year at that point for doing absolutely nothing. So if you've invested a long time ago and then just kept your money, that is called yield on cost. So for you, your actual yield on that money is going up over time because the company keeps increasing it. It's a really great thing. And I'll show you companies that do it in mass scale really quick too, just to kind of give you an example. So what I'm going to do is I'm going to show you another company I have in my portfolio, which is Mastercard. So Mastercard obviously does have a dividend yield, but this dividend yield is pretty low. It's 0.53%. So it's definitely more focused on the growth aspect, but let's look at their 5-year growth rate, 24.57%, meaning that your money is growing at a pretty exponential rate as far as the actual dividend. So their last dividend increase was on December 3rd, 2019. Right over here. So you went from making, if you had one share of Mastercard, you were earning 33 cents a share. And then all of a sudden, because they decided to increase their dividend yield to 40 cents, that's a 21.2% dividend increase. So even if you just had one share, you automatically got 7 more cents every single quarter throughout that year and beyond, as long as they kept that dividend. So to me, that's something that's great. That's something that I love to pay attention to. Obviously, Aflac, the last two have been a little bit below par from where their 5-year average is. But this one, as an example with Mastercard, is pretty amazing, to be honest. Obviously, their starting yield is really low, so you're not going to get a lot of bang for your buck at the beginning, but over time that can happen. So let's go ahead and hop back over to Aflac here. I'm gonna scroll back up. All right, so another thing that we wanna look at as well too, of course, is some of the financial pieces when it comes to this actual company. What we're gonna do, oops, let's go ahead and click on over here. Actually, what I'm gonna do is go into my portfolio right up here. So I actually have my portfolio built into Seeking Alpha for what I have in my M1 Finance account. But here's the beautiful thing. I can actually click on the debt section right over here and kind of bring up all of my companies together, but it's just mainly easy for me to see across the board with, the individual company I'm looking at, which is Aflac. So I can see their total debt is 9.73 billion. Short-term debt is about 3 billion, and then long-term is about 6.6 billion. So you can see their cash equivalents, which is 5.6 billion, and then you can see their current ratio is 0.47, which is a good ratio. Usually you want to be like 0.50 and below is a pretty good ratio in that category there. So their debt to cash flow is a really good position right there for them to be making sure that they're not over leveraged in the amount of stuff that they have in debt. So let me go back into their portfolio here so you can kind of see all this stuff. Now on Seeking Alpha 2, in case you're curious to learn more about this company, they're going to have all these extra sections in the news, so you can check those out if you want to. Again, make sure you do extended research on your own before making decisions on whether you want to go with Aflac or not. If you want to keep on learning more when it comes to getting started with investing, check out my next video right over here. My name is Dennis, and thank you so much for watching.